Okay, what's up everyone? This is Training Ground episode 5. Today I will be talking about break of structure. We already discussed trends, so basically the next step is going to be break of structure. So what is a break of structure? Well, a break of structure basically is the point where the market switches direction, is how I can kind of explain it. So it's basically the first indication of a reversal after usually a liquidity sweep. So it's usually like liquidity sweep and then a break of structure. And I will do a separate episode on liquidity sweeps on Sunday, I think, because it's Friday. Tomorrow will be another psychology episode, and then I can do another strategy video, which is on Sunday. So let's basically look at what a break of structure is. So basically, you see that maybe the chart is going like this, blah, 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 blah. You see a push, and then, there was maybe another high here somewhere, and then we swept the liquidity right here, and then we reverse off of this, and then we start going lower and lower, 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 blah, blah. Okay. So, the first indication that there is a reversal is usually a liquidity sweep right here. Boom, that we do. So maybe we wick this out. A wick out basically is just when the wick of a candle goes above like the top wick of the previous liquidity. So that's how you know it basically swept it, that it goes above it and wicks it out, I guess. So in this market here, there will be a break of structure or like a change of direction in the markets or a market structure shift. This basically means a break of structure. So all of this is just like the same concept basically. So the market changes character. That's another term used for this as well. So, we kind of go in the markets, you zoom in the chart, and then I'll just draw up something real quick. So, we had the liquidity sweep, and then there's gonna be like one candle here, and then another candle here. And maybe we kind of like have a low somewhere down here. That's just like, the two candle patterns that we talked about. So this is going to be red, real quick, red. And then we can make this green real quick. It's just about the same level here. Same size and shit. So the same size basically. And then we have the wicks of the candles. We have a low, which is a bearish candle first, and then a bullish candle next to it. So this is going to be our low. And then let's put this down a bit somewhere here. I'll show you examples as well. So, let's do the wicks as well. So we create a low somewhere here in the market, and then, we have a candle or two candles that wicks this out. We have the liquidity sweep. So when we close below the wicks of this low, boom, right here, our candle went below this level right here. The body of the candle closed below this line, as you can see, which is really important with basically every single concept. The wick is usually not enough, only in fair value gaps or order blocks. But right here, the whole body has to close below this level, so below this low. And then if you do that, that means we switch directions and we're going to reverse off of this. So let's find an example real quick. Okay, so let me show you a bullish reversal first with this right here. So, market came down, and then we basically are looking for the most recent highs that got made, which would be this high right here. So you can mark this out for yourself. We basically had the push down, and then we swept liquidity here, and then after this high we also swept liquidity here, and then market just started pushing up. So let's see what happened. So we had these highs, but the most recent ones, I guess, no, that's actually the most recent one. Okay, so these were the most recent highs. And then as you can see, we closed above this level with the whole body of the wick, and then we continued upwards. I think we even, yeah, we basically got to this point. And then, market just started doing its thing. Okay, so let's you just take a trade off of liquidity sweep and then a break of structure. Your stops would be below liquidity right here. And then maybe you target these highs, or you could target these highs. You could go big or go home, You target these highs, and then let's see how it plays out. Boom, it hit your take profit. You didn't even go into drawdown one bit. So this is a really good example of this. So, you got the break of structure, you got the liquidity sweep, and then boom, market, just started doing its thing. Let's see it on the 1 minute as well. If I can even find this somewhere. It's going to be back here. Okay, let's see how the 1 minute looks. Okay, good. So, we had these highs right here that we marked out on the 5 minute, and then you would look for an entry here. So let's say you entered top of this candle. So, the body of this candle closed above this line right here, this level that we made the high. And then you could do this below liquidity, and then you just aim for this liquidity right here. And then, you can kind of zoom out, whatever, boom, hit your TP, no drawdown basically. So this is why it's really important to know these concepts, because if you see a good setup, you have to take it, and market usually does its thing. So let me search for a bearish reversal. I mean, it's right here. So this is our most recent liquidity. We swept liquidity right here. I'm just trying to kind of see what's going on. Okay, so we swept liquidity, boom, and then let's look for our most recent lows. Okay, let's see. Okay, we made a low right here. So after the liquidity sweep, you can mark this out, and then, market just start doing its thing. By the way, we have a fair value gap here, which got invalidated as well, which is a really good entry as well. But we'll talk about it in a future episode in like a week or two. So you see, you mark this out. You marked out your low right here. So the body of this candle closed below this low, and then, market did its thing once again. It reversed off of this and off of this liquidity right here. So liquidity here, sweep, boom, up. But you would have targeted most recent liquidity. So let's do a short position right here. We could go into the 1 minute, but I don't think it's necessary because this is a pretty good move right here. So you take your short position above liquidity, search for the most recent liquidity under here. Boom, you have a 2.2 risk to reward. Boom, hits it, easy. Next question, basically. Okay, so I showed you guys break of structure, why it's really good to spot reversals with this. I think I forgot to mention one more thing of how to spot a high and a low. So if you are looking at the markets in real time, you have to search for the most recent lows or the most recent highs. So if market is right here, you saw this candle close, this green candle, you look for the most recent high, which would be the closest high. And you start looking from like left to right. So, there's green candle, green candle, green candle, green candle, boom, you have a green candle right here. There's a red candle next to it. So this is your high. Wick of the whichever candle's wick is the highest, that is your high. Okay, let's see a low. So, you can do this is a green, 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 red, boom, high. Okay, so then it's a red and green, so this is low. You go green, red, high, red, green, low, red, red, green, low, red, green, low, red, green, low, green, green, red, high, green, 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 blah, 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 blah. You get to this level. This is your high, most recent one, because, you know, market just closed here. It's forming this candle. This is how you spot the most recent highs and lows. This is basically it for today's video. I will see you guys tomorrow with psychology. Peace out. Follow the Discord. Bye.